Elizabeth, one of the managers of the Aberdeen China Investment Company. The objective of the trust is to generate returns predominantly through investing in Chinese equities. We have identified 5 key investment themes. These are aspiration, health, wealth, digital, and green, where we believe that we'll be able to find long-term structural opportunities and generate the best returns investing in China. So for aspiration, rising affluence in China is leading to a rise in spending across different segments in the Chinese economy. As the upper and middle income groups grow, customers are increasingly looking to upgrade their quality of life, their standard of living across all areas. So this includes the food and beverage that they consume, the shopping that they do, and the holidays that they take. So within Aspiration, one stock example that we have is China Tourism Duty Free Group. This is one of the leading duty-free operators in China and globally. They have a monopoly of the nationwide duty-free licenses in China. And we like this company because of its dominant position. They're a very unique China consumer play as the largest DFS operator in China. And they are being boosted by the government's policy agenda to bring back spending that Chinese tourists have in the past done overseas, shopping in Europe, shopping elsewhere. The government is trying to bring this spending back to China, and with a duty-free policy, they're able to capture much of this spending. They have growing economies of scale, so this is helpful to drive margin expansion, and they're also a beneficiary of potential airport reform as a strong contender for other duty-free licenses in China. We like this company because management have a very strong execution track record, and the company also has healthy financials with a net cash balance sheet position. Another example within the aspiration theme that we like is a company called Kwik Maotai. They are a very high-end Chinese liquor maker. They've got a very strong domestic moat and strong brand equity. And so they're very dominant in the Chinese baijiu market. So we see their moat as coming from the brand value and the long history and rich heritage that they have in China. Premiumization is still a key driver for this segment. And this company, Maotai, is very well positioned to benefit from the trend of premiumization. The company has also been focused on improving their distribution, their pricing, maintaining high product quality, and the growing segment of high net worth individuals in China will underpin long-term demand. The second theme that we like is the theme of going green in China. China has a goal of becoming net carbon neutral by the year 2060. They've been a leader globally and an early mover in the renewable energy space, as they do not want to be reliant on other sources of energy, in particular oil, where they are currently a net importer. So they have been an early investor in this space, especially in the renewable and battery value chains. And now they have over 80% market share in battery and solar value chains globally. One example of a company that we like within this space is called Contemporary Amperex Technology, or CATL. They are a leading electric vehicle battery maker with a dominant market share in China. They're an industry leader globally for EV batteries and energy storage systems. They have very strong linkages within China's local supply chain, and they supply to some of the biggest and most well-known brands, including BYD, as well as global brands such as Tesla. They have a best-in-class margin profile due to favorable mix, pricing, and technology leadership. And they've got ambitious capacity expansion plans in order to boost their market share and continue to grow their order book. They have a very efficient cost structure, which allows them to benefit from a higher margin thanks to their economies of scale and high vertical integration within their business. And they have very strong consumer ties and a quality track record to further hone their competitive edge. So we believe that this company is well positioned to compete and benefit as the world switches increasingly to electric vehicles and to be more environmentally conscious. The next theme that we like is the digital theme. Beyond the consumer-driven digital economy in China, we're also beginning to see the adoption of digital technologies in more traditional industrial sectors. While it is still in its infancy, an increasing innovation here is already improving productivity, boosting competitiveness, and lowering costs for the Chinese economy. The growth of China's digital economy has been extremely strong. The industry's value to GDP has doubled in 10 years to nearly 40%, and the outlook is also very encouraging. Policymakers want to create a more modern and socially equal society, so investment and policies are designed to fuel innovation, to drive technology, localization, and to enhance self-sufficiency to meet this goal. For us, the dynamics within China's software sector is particularly interesting. Companies here tend to work more on a consulting basis, providing bespoke solutions for each client. This results in stronger customer relations and consistent earnings. One example of a company that we like in the software space is called Hansen. They are the country's third largest IT solutions vendor for financial firms, offering portfolio management and trading systems. Within China, they have a 49% market share for security brokers, 80% market share for mutual fund managers, and over 90% market share for insurance groups. The formalization of trading and investing practices is vital to create a more fair, a more efficient, and a better regulated capital market in China, which is one of the government's priorities. Forward-looking initiatives also involve data intelligence services. They've established R&D labs with financial institutions, and they run profitable subscription payment models. So we believe that all these should continue to help the company achieve its goal of making finance easy, which is very much aligned with the government policy objectives here as well. So the next theme that we like is that of wealth. China has a stated policy aim to become a moderately prosperous society by the year 2035. And a major component of this state is higher wages for everyone. China has made significant progress in this area. In 1980, the gross national income was about US dollars 220, and in 2021, this has risen significantly to almost $12,000. So we are seeing rapid increases at the top end of the wealth scale. The number of Chinese millionaires, for example, looks set to double from 6.2 million in 2021 to 12.2 million by the year 2026. And as disposable incomes continue to grow, we believe that there will be an increasing need for a range of financial services as people look to preserve this wealth and grow the wealth that they've accumulated so far. So this includes things from consumer banking to software to wealth management and insurance. So for investors like us, this creates opportunities to tap into these long-term structural growth stories. One example of a company that falls within the wealth theme is China Merchants Bank. So they are a high-quality bank with a strong consumer banking franchise. What we like about the company is that they are one of the highest quality lenders in China. They have a strong retail franchise, which makes their customer base sticky, and they have industry-leading return on equity and asset quality numbers. And this has been the case over many years. They have an impressive execution track record, which points to the strength of the management team. They have strong pricing power in retail banking, so with retail deposits per branch significantly higher than peers average. They have a lower deposit cost versus their rivals, which is a key advantage for them as well. And importantly, within banking in China, they have a very strong track record of prudent risk management and a non-performing loan coverage ratio exceeding 400%, which is again amongst the highest in the industry. So with this fast-growing wealth management business that they have, this should help to boost deposits and growth. And we believe that they are considered a fintech pioneer as they continue to invest heavily in digital capabilities. So with a bank like this, we believe that this is one way to capture the trend of rising affluence and the need for more financial and wealth protection services in China. Finally, we have the health theme. China's healthcare market is very large and expanding rapidly. This is driven by a few things. So firstly, an aging population with life expectancy going up from 69 years in the early 90s to 77 today, as well as economic growth and improved basic health insurance. All of these are factors that have been driving demand for healthcare services in China. The government has significantly increased their investment and introduced policies designed to strengthen the healthcare system in China. Spending currently accounts for around 5% of GDP and is set to increase over the next decade. The government's stated goal is to make healthcare cheaper and more accessible to all. At the same time, with China's gross national income per capita growing strongly, there is an affluent middle class of consumers who are placing greater emphasis on health and well-being. Younger generations in particular are looking to have a healthier lifestyle, so many of them are willing and able to pay for preventive measures to protect themselves. This has led to strong growth in specialist care, high-tech devices, and top-end therapies. To give an example of an area and company that we like within the China healthcare space, China's medical device market is an area that used to be, and still to a certain extent, is dominated by foreign players. But there are signs that this is increasingly changing. The US-China trade war, which began in 2018, meant that many Chinese healthcare companies had to look inward to develop their own products and systems. And meanwhile, the COVID-19 pandemic over the last few years has also accelerated the need to develop the healthcare infrastructure in China. So one company that we like is called Shenzhen Mindray. They design and produce medical equipment and accessories for both human and veterinary use. Their three main businesses are patient monitoring and life support, in vitro diagnostics, and medical imaging systems. So they are one of the Chinese companies which are underpinning this roadmap towards more localization in the Chinese healthcare space while seeking to gain share overseas as well. So new product groups and their ongoing platform business model has meant that this will be able to drive the company's long-term growth outlook. And we like them because we believe that they're benefiting from this rise in demand for healthcare and related infrastructure in China, as well as the increasing trend towards the government encouraging hospitals and the healthcare system to use more local providers where possible. So to sum up, these 5 areas of aspiration, digital, green, health, and wealth are 5 key areas where we believe that we can find the best opportunities to invest in China. We're not just looking at a short-term time horizon of the next few months, but we believe that these are key areas of structural growth supported by government policy that will be able to drive the economy forward in the next few years.